ready to unlock the secrets of financial freedom on Infinite Banking for real estate investors. This show is for visionary entrepreneurs who value family, faith, and financial freedom. It's time to seize control of your finances and craft the future you've always envisioned. And now, here is your host, Mark Clark.
Welcome to our podcast, Infinite Banking for Real Estate Investors. I am Mark Andrew Clark, an authorized infinite banking practitioner with the Nelson Nash Institute. If you're like me, you have a passion for real estate and you probably also value family, faith, freedom, and fitness. You may be a seasoned investor or looking to get into real estate for the very first time. Either way, we're going to show you how infinite banking can create velocity with your money and your real estate portfolio. Today's episode is titled Setting Up Future Generations with Infinite Banking. Now, before we dive into today's topic, let's remember that first and foremost, becoming your own banker is a process and not a product. And that infinite banking is the perfect vehicle to build and protect generational wealth via real estate investing, because we can make money in two places or multiple places at once with the same dollars. All right, so today, again, we're going to discuss setting up future generations with infinite banking. Like the Rockefellers, it is not enough that we get ourselves into infinite banking, but we must encourage our children, great-grandchildren, great-grandchildren, etc., to utilize the enormous power that is infinite banking. As you may or may not know, I don't know, the Rockefellers have utilized infinite banking as a central vehicle to generate, maximize, and protect generational wealth for well over a century. Now, they've done that via a family trust, and we'll explore trusts in a future episode, but today I'm going to share my own family's journey. So I've been an insurance agent for over 10 years, but had never even heard of infinite banking until late in 2021. Of course, then I read Nelson Nash's book, Becoming Your Own Banker, and it really struck a chord with me. And at first, so I'm 57 years old, and at first I was a little miffed that I hadn't heard about this 20 or 30 years earlier, when I was in my 30s or 20s. However, as they say, the best time to plant a tree was 20 years ago, but the next best time is today. So let's get after it. So at that point, we really researched the topic voraciously and became an authorized infinite banking practitioner shortly thereafter. The Clark family immediately invested $20,000 per year for the first 5 years in an infinite banking policy on myself. We actually leveraged $30,000 in that cash value towards a rental property last year. And then somewhere in that midst, for the second generation, my daughter and son-in-law invest $15,000 per year in their own policy. And now, since our grandson was born Easter Sunday, we're ready for the third generation. And we're investing $5,000 per year until he's 8 years old. And let's actually look at some of those numbers in his policy. Now, keep in mind that for juveniles, there are some limitations that wouldn't necessarily apply to grown children or adults. But as we pull this up, and I'm going to share the screen now, but as we pull this up, we're going to look at premiums first, and then we're going to look at the cash value, and finally the death benefit. So as you can see here, again, for the first 5 years, we're putting in $5,000 per year until he's 8 years old. Okay, Then after that, it's going to revert to the base amount, which in this case is $1,420. And we're going to do that, whoops, we're going to do that down until he's, where am I at here? Sorry, we're going to do that down until he's 75 years old. Now, at some point in that adulthood of his, we'll revert that policy to him, make him the owner, and he can do with what it as he wishes. But until that point, I'm the actual owner of the policy, okay? And I can leverage that cash value. And we're going to look over here on the non-guaranteed side, okay? So as you can see, the first couple years we are, if you will, we're capitalizing the policy. So we don't make a profit right away. That's the way infinite banking works. But very quickly, we are approaching the amount that we put into it, we're getting out of it. And you can see by year 10, when he's 10 years old, we've put in $42,839 over here on the left. And then on the right-hand side, we're looking at the non-guaranteed side, because even though that's non-guaranteed, that is what we're after, because we're dealing with companies that have been in business for over 100 years. They really have never missed a dividend payment. So even though they can't guarantee it, it's the next best thing to a guarantee. So over here on the non-guaranteed side, again, at age 10, $48,397 in cash value. And as we scroll down, you can see by age 30, he's going to have $157,000 in cash value at his disposal. We would have put in $71,000 at that point. And then it just continues to grow and to grow and to grow. And again, he can leverage that money as he sees fit. I'm going to control it at least until he's 18, so I can leverage it and pay it back into the policy while it's still making money, uninterrupted, tax-free, guaranteed growth that we control, that's protected from creditors. It doesn't get much better than this, okay? And let's just keep going down the numbers. So by the time he's 50, $417,000 in cash value, okay? Whoops, $417,000 in cash value. And by the time he's 60, $665,000, et cetera, et cetera. Now, hopefully he'll get his own policy too, but that's what it is at this point. And as we continue to go down, let me get rid of these annotations here. Oh, well, you guys get the picture. So as we continue to go down, let's look at when he's 80. So there you have $1.5 million in cash value. And oh yeah, we always seem to forget about the death benefit side. So on the death benefit side, at age 80, his beneficiary would get $1.9 million as a death benefit. Again, tax-free. Check with your accountant, but in most states that's the case on life insurance proceeds. Let's say he lives to the ripe old age of 90. His beneficiary will get $2,433,000 and $997 minus any outstanding loan balances that he may have utilized for whatever he wanted. So to build cash flowing assets is what we use it for, real estate primarily, but you can use it for a lot of different things. So I'm going to stop sharing because that's what I wanted to go over, the way the numbers actually work for my grandson's policy. Okay. And It's, again, the most powerful tool that I've come across to maximize, protect, and just create velocity for your generational wealth if you want to leave a legacy starting now for future generations. So we encourage you to visit our website right now at www.generationbankpa.com and get your free copy of Becoming Your Own Banker by Nelson Nash. That is absolutely the first step in implementing your own self-reliant banking system and create that generational wealth, allowing you to fund the real estate deals you want, when you want, and how you want. Again, that website is generationbankpa, as in Papa Alpha.com. Until next time, we hope you hold dear family, faith, freedom, and fitness. Have a blessed day.